Hey there. You're here to have me do your taxes for you? No, you can keep all of your paper forms. I really don't need them. I actually, have all your passwords, so... Yeah, no, if you could just check them in this book. Yeah. Let me show you the page with my notes on you. Yeah, it's this one. There you go. I'll just need your phone for certain two-factor authentication things. But for the most part, we should be good to go. I'm going to just set up some things on my end. It seems like you've got a good, good password security on there. I'm actually gonna... Alright. So we're gonna start verifying your information. If you can just take a look at the screen over here. I've got it facing both of us so you can see what I'm doing. And as I go, could you just verify the information we have? So how I started you off is I've got the information up there just from your previous tax return. You provided that to me because I needed it as your tax preparer, and that is basically how I was able to obtain all your passwords for all your banking information. I did need it, but also, well, you know what you're getting yourself into. So yeah, basically just looking for if you've had a name change, an occupation change, social security number change, birthday change. Yeah? No, that's possible, yeah. Address change. You still can't be claimed as a dependent, correct? And are you legally blind? No, you can see me? Okay, good. Great way to commit tax fraud, by the way. Well, there are better ways, of course, but... Alright. And, you're not dead, correct? Okay, excellent. And do you want to contribute $3 of your federal tax return to the presidential election campaign fund? No? Yeah, good. Fuck the government, fuck the system. This year is going to be a nightmare. And are you still single? I thought so. Do you have any dependents or qualifying children to declare on your taxes? No? Okay. Forever alone. Yep. Understood. Do you have an identity protection pin? This would usually be in the case that you need to verify your identity through another, extra method, with the IRS. Usually in the case of identity theft, to verify that, yes, you, the real you, are the one submitting this tax return. Well, your identity might be stolen soon since I have all this information on you, so we'll think about that. Okay. Your W-2, I already have this pulled up. I'm just gonna go through the information with you. There was something I did notice that was a little odd. So we've got an employer that is in one of the states listed here, a free tax state, but they're paying out taxes to you, half in another state that is not a free state, and half in that free state. Okay. Okay. Reciprocity laws, yes. Okay, so that was just passed this year for your states? Okay. Yeah. So has your employer's address changed? Okay, take a look. So on the tax return, it looks like it is still the previous address. Yeah. Okay. So we'll go with that. Yep. Okay. That does explain all of that. From all this, there were a few things. I wanted to verify, which was we have noted on here your family medical leave and your state disability insurance payouts from the first state that you were issued or that you were paying income tax to, and not the second. Yeah, no clue. Okay. So what this is going to mean is I'm going to have to fill out a tax return for both states. There's going to be a bit of an extra charge for that just because, this is essentially, instead of doing federal taxes plus your state taxes, I'm going to have to do a third set of taxes. These taxes are really not a big deal. That would be just an extra, I believe, a $30 charge. If that's all right with you, we can continue. If not, I can try to provide you some resources for how to finish these taxes on your own. I can print everything out for you at the end of the agreed upon rates and point you towards some resources that'll help you. Yes, no, so the free taxes, because the one of the states, the state that you need to be paying taxes to in the end, is not free. We're gonna have a problem, basically. You're going to be paying taxes probably to that state while receiving a big refund from the other state. And the way we can sort of put these together is just, we're going to have to put it all in the same system rather than jumping across systems to fill out your taxes via the free online form that's specifically for one state. If I were to do that, it would actually end up costing about the same amount just for the effort of re-importing to that system. Yeah. But like I said, I can point you to how to do it. If you'd like. No? Okay. Yeah, no. Yeah, I mean, yes, if I were you, I would do it the way that I'm doing it because I'm the one doing it, and this is the way I'm doing it, so. Okay. Just gonna review these numbers real quick against your W-2. Make sure that everything looks good. This is probably my third time doing that. Okay. And your interest income. I know you said you've had a number of 1099s come in the mail. I started opening them up, but I just want to make sure I've got everything. So here I have, for your interest income, I have, from last year you had this payout from Discover Bank. And I was able to log in and review that. You've just got a standard interest income, no state taxes withheld, no other taxes withheld, no tax exempt interest. Okay. Right. Okay. And do you have a FATCA filing requirement? FATCA? No, it's not. It's not a common thing. If you don't know what it is, it probably doesn't apply to you. And you do not have state tax withheld. I just confirmed that. Yep. Do you have any other 1099s that I wasn't able to find? It would be anything new, any new accounts that you'd open this year. Okay. And you do have the paper. Excellent. Thank you. Excellent. Okay. Interesting. This isn't well filled out, that's all. I may actually end up looking for it online, but it might just be the same. Excellent. Okay. Interesting. These are usually pretty bare bones. Oh, sorry. You caught me. I was trying to steal your information again. Okay. That'll do. Okay. And are those the only 1099 NC you received? So no, those are 1099 divs, and this would be any account that is in a financial institution that is just accruing interest, purely from interest, not from investments. A 1099 div, since we're dividends, that's where that would come in, and we'll be moving to that step next. So go ahead, you can grab those, and we can confirm the 1099 divs that I do have for you. So I have two from the same provider. You have two taxable accounts with this. Okay. One's converted. Gotcha. Okay. I mean, it's perfectly reasonable to have multiple accounts for any reason. If you just want to separate them into this one is for this kind of fun, this one is for this kind of fun. Anyway, so in this one we have a bit of foreign tax, which is very interesting. It allows me to go in my spiel about TurboTax, which you should never use. With a foreign tax payout, that might require you to upgrade to probably a $40 version of, might be up to $60 now, version of the TurboTax filing software that advertises itself as free. And yet only applies, as they've had to clarify in all of their obnoxious advertising this year, to 37% of US taxpayers. So the idea is to lure you in with, it's free, and then basically scam you out of the money because you're halfway done and you don't want to switch to another method of doing your taxes. And at that point, it's too late to back out because of your... Oh, it's a bias. No, I'll get it. I will get it. Fallacy. It's a fallacy, not a bias. I mixed those two up. Sunk cost fallacy. Yep. And you sink even more into that cost by purchasing premium. And then, oh, just you wait. And then you've got some exempt interest dividends, and that's what I really need to ask you about. This $4 of exempt interest and your $1 of specified private activity bond interest in your one reporting. Now that, I believe, would require the most premium TurboTax software, short of having hiring a tax professional to help you with through them to help you with the software. And basically all that is that they're on call to help you when you have questions when you're doing it yourself. And that would run you about $120. I think all for this $4 of exempt interest. Aren't you glad you hired me for less than that amount? Yep. Yeah, that's what I thought. And they don't even do a good job. So, the question I had about your state tax-exempt dividends. These are, I noticed, from the second state that you paid taxes to. Now, are you living in that state? According to your tax records, you may be living in that state. Some of your accounts are in one state, some of them are in the other, for the same institution. Okay. That means that none of your taxes or none of your dividends are tax exempt. I'm sure you don't want to commit tax fraud. Yeah, it's more trouble than it's worth, I agree. I'd charge a high service for that one. Okay, so that's a 0. And we'll continue. Alright, I know you didn't change employment this year, but did you receive any unemployment compensation? No, of course that's not legal. But did you? Okay. Now I was really excited for how we could figure out how to report that. That's gonna be fun. So you do have a 1099-R for retirement income, which is interesting. Considering you are 35. So this is for your traditional IRA? No, this is for your Roth IRA. Oh, it was a conversion. Okay, you converted from a Roth IRA to a traditional IRA. And when did you do that? Last year. Can I ask why? Income limits, of course. Okay. Forgot you're rich enough to hire someone to do your tax preparation. Of course. Okay. Looks like this is from the same... I just wanted to ask about this because it seemed fraudulent. I haven't filled it out yet. So, I hope you'll excuse me as I type this out. That is a domestic address, yes, okay. P.O. Box. That's no fun. Where am I going to send the bomb? Okay. Someday I will remember what layers I have on my keyboard. And do they have a phone number? Okay. Okay. And their tax ID number. I see that on the form. I'll just jot that down. Okay. And on this is the account that is reporting a address from the second state. So what you're going to want to do is, this probably won't be an issue. I would report the your actual address, the one that's on your other accounts, and I would update this account with the bank that you're using to your current address, just so that you don't raise any red flags with the IRS when there's a mismatch of addresses. If all of your addresses match for the purposes for the receipt of these within your tax return, it's less likely to raise a flag for them to, check on it and say, hey, what address is this? Who's, where, what, how, why? They're less likely to compare the two tax forms and think, hey, this is wrong because this is the wrong address. They're more likely to say, oh, this was just the wrong address, this is an old address. And just to make that more secure, there's an optional account number I'm going to put down that will link you back. So let me just grab that from your forms. Okay, all set. And it looks like you had, this was the distribution, and absolutely zero of it was taxable. So that does explain what happened, is that if you're doing a conversion, that's not a taxable event. And for the rest of this, I'm seeing a lot of blanks. But we are going to need the state that paid it out, which is interesting. That'll be alright with the reciprocity between these states. You picked a good one to have as your incorrect address. It's not like there was any withholdings anyway. Everything here is blank. Come now. The idea is too long to fit. That's interesting. Is this a corrected form? Did you receive multiple copies of this form at any point? Okay, good. Are you a retired public safety officer? Most of these questions are for somebody who's actually receiving distributions from their IRA, so they don't reply to you. Did you take this distribution due to a 2023 qualified disaster or 2022 qualified disaster? Yeah. That was not a disaster. It was actually a influx of money, wasn't it? Yeah. I'm aware. Let's double check our payer info. We need to make sure that this matches the IRS's records so that they don't reject the return automatically. And I'll let them know that this was a rollover. Okay. I'm getting all these flags from my tax software. Thanks for committing fraud, but I see. I made a typo. It was word that there were $7 million going on here. There we are. Okay, now it's pleased. other than your 1099s, just want to go through some other forms. Those were the only ones I found. So did you receive any Social Security benefits? Basically, were you able to get on welfare or disability? Yeah, it's quite difficult. They're making it more difficult these days, but those who manage it really only get a pittance, so not a great state of affairs, but I love anybody who makes it work. So do you have taxable requirement income? Oh, sorry. We've just figured that out. You don't. Do you have a taxable state refund? You would have received a 1099-G. I know, yeah, go through your forms. You probably don't have it. That's an uncommon circumstance. So this would be if you received a refund last year from your state tax forms. And the only way that this comes up is if you itemize your deductions. I think you have to make more money than God in order to make itemized deductions reasonable, but you tell me. Do you itemize your deductions? That's what I figured. That's why I didn't charge you as much. Okay. So, we won't have any 1099-Gs to worry about. You can quit that. Alright. Now, did you sell any stocks? You would have received a 1099-B. Okay. We could check on that for you. It was a hard year. A lot of people were, just because of the downturn in the stock market that continued to turn and turn down. A lot of people psychologically aren't able to hold their money in the stock market, and they will sell. So we can take a look at your accounts and see if you have any tax forms reporting a sale. It's looking like a no. So congrats to you for beating psychology. Do you have any capital loss carryovers? So what that is if you sell at a loss, you can carry over that loss to it's something called tax loss harvesting, essentially, or loss harvesting, I guess. In general, the capital is not necessarily investments. The idea is you sell at a loss, and you're able to use that as a reduction of your capital gains, so that if you make a great sale, you're going to want to offset that sale with selling off some things that didn't do so hot during that same tax year, and that way you won't be taxed as harshly for your gains because it's being offset by your losses. I don't really recommend holding on to losing stocks for that long. If you don't believe in it, sell it. It doesn't matter when it is. So I wouldn't advise you do anything really about that in particular, in the future, I mean. But if you in the past did participate in tax loss harvesting, then it's possible if you sold at a loss more than you gained, that those losses would carry over to your next tax return, which is another reason you don't need to wait if you're concerned with a tax that, or with a stock that is losing. Just let bygones be bygones. Yeah, well, maybe we'll talk about it on our next return. We won't see the 1099G necessarily. We would see that the year after that if you were able to sell at a loss so much that it carried over to your next return. Otherwise, nope. Now, do you have any business or rental income? So what you're going to be looking for here, well, first of all, are you a fucking landlord? Good. That's what I thought. If you weren't, well, I have a lot of your passwords and your social security number, and I would make that your problem. But if you have a farm, and you need to report your farming income, which is reported differently than other income, if you own your own business, yeah, okay. You didn't sell a business or anything, right? Okay. No, never owned a business, okay. Did you have any gambling earnings? Are you a trust fund baby? Okay, another reason I might have to blackmail you with all the passwords I have. How about royalties? Do you have any royalty income? Did you sell a home this year? Or last year? Okay. We don't have social security benefits, so you don't have an ABLE account, correct? Okay. And you have no dependents? Yeah. Just scrolling through everything, sort of translating it for you. You don't have any undistributed long-term capital gains? Yeah, that's a bit of a situation. You should be that's a tough situation to explain. It's about a sale that basically, if you haven't distributed the earnings, that's a lot going on. You probably wouldn't encounter this sort of thing. Did you take out any loans? Okay. I believe that's it. If you have any unreported tips, I refuse to report them. Fuck the government. So I'm not even going to ask you about that form. Did you have to cancel on any debt? Okay, good. Alright. This is another question I'm going to hold hostage your banking information for. Did you ever invest in cryptocurrency? And most importantly, did you do it in 2023? Did you do any buying, selling, exchanging, anything at all with cryptocurrency? Buy any NFTs? Okay. That's the right answer. Do you have any banks in foreign countries? Okay. And you don't have a business, you said already, right? So we don't have to worry about qualified business income deduction carry forwards. Okay. Okay, so this is an overview of the amount you made. Okay. Yeah. Those are your taxable, that is essentially your, adjusted gross income. So if you ever need to report that anywhere, that number here at the top, that's what you're going to want to tell people. This is not your, it's a whole thing. This This is your taxable income. This is not the true gross income. It's adjusted for what part of it was actually taxable. And because you made all of those traditional IRA and 401k contributions, the number is a bit smaller than your actual gross income. Understood? Well, it's my job to understand, not yours. Okay, we're gonna start doing the deductions now. Are you a homeowner? Interesting, okay. Did you make any donations? You're gonna have to make a large number of donations in order to qualify for an actual deduction on this. This is all about whether or not you're going to itemize your deductions, and your itemized deductions this year are, I don't remember the exact number, it's around 13,000. So unless your donations, medical expenses, state income taxes, sales tax, those sorts of things, disaster, casualties, thefts, yeah, we can go through the list if you like. Okay. So, for donations to charity, do you have a number? Yeah, and it's okay if you don't have the receipts. They really don't ask for them until you're being audited. Just make sure you do have the receipts on record somewhere, even if you don't have them day to day. And for now, I'm fine just throwing in an estimate, and we'll see if the itemized deductions are, in fact, the right way to go for you. And were any of those donations non-cash? Okay. And do you have any donation carryovers from last year? And this would only be if you were itemizing your deductions. What that would be is, for instance, you itemized your deductions and you donated so much money that it completely canceled out your income. Basically, you would have had to donate the entirety of your income and more. Yeah. Not coming. And did you do any volunteering where you used your own vehicle? Yeah. Yeah, you drove to charity event. Okay, okay. How far did you drive? Okay. Let's see. Put in a rough number there. And did you pay any out-of-pocket expenses while giving services to a charitable donation? I'm gonna imagine yes. Oh wow, hotels, yeah. Okay. 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 And for your medical expenses, so I'm going to ask you about your health insurance premiums, but this is not including anything that was deducted in your from your income. Okay? Meaning that if you had to pay something out of pocket, for your insurance premiums, not something that was deducted from your paycheck. That didn't happen, yeah, okay. Did you pay any long-term care insurance premiums for an aging relative, for instance? Okay. And your doctor's expenses, medical expenses you paid to doctors, dentists, chiropractors, psychiatrists, other medical professionals. You know, I'm not sure if a therapist counts. How much would you say? Okay. Okay. Any hospital expenses? Okay. And any prescriptions purchased? Yeah, really? Okay, okay. Alright. How about money that you spent on medical equipment or supplies? This can be like, this includes even, I should say that there's a lot of things here. But glasses and contact lenses count. A wheelchair, other mobility aids, sort of think outside the box of anything that might be medical. Something that you can technically use HSA or FSA funds on, that sort of way. Didn't get glasses last year, yeah, okay. Anything else you can think of? Yeah, even if you didn't use your HSA. Yep. Okay. Yeah, you use your HSA as more of a retirement vehicle. Okay. That makes sense at your income level, that it's much more tax advantaged, and therefore better for you in the long run if you invest the money in your HSA, put that into the stock market, and when you incur a medical expense, just pay for it out of pocket and pretend you don't even have the HSA. The HSA is a nice security blanket that you can pull from if you do have a medical expense, which is great for something like a more robust security fund, we call it, where typically you're going to want some sort of months of typical expenses as your security fund. 6 is nice in this uncertain job market we have. This is a lot of financial advice, I know. Yeah. And so with that, if you're a little nervous about, medical expenses being the thing that drains you, and so suddenly 6 months turns into like a couple weeks, that's where an HSA can come in. As that very last resort medical emergency buffer. Because that's going to be the sort of thing that just runs you dry, is a medical expense. Okay. Now, did you ever travel for any medical procedures? Any considerable distance? Okay. And any other medical expenses? Okay. Alright, we'll continue. Okay. So, we already have your state tax withholdings. I'm going to ask you some more state tax questions. Do you know how much you've spent in sales tax this year? It's something you really would need to keep your receipts for. Every single one. Yep. Yeah, that's okay. We don't have to fill that out. Again, this is the itemized forms. I'm running a calculator basically to see if it's worth exploring an itemized deduction instead of a standard deduction. So it's very possible that the answer to that question is no. And right now we're going to work with estimates. If you'd like to put in an estimate. Yeah, there is actually a calculator. Yeah, we can work on that later if we see it's close, yeah. It's a bit of a process. It's going to need your AGI, it's going to need your location, it's going to need any large purchases you made just to factor that into, you know, everyday purchases that it's estimating. Alright, so did you owe money on your 2022 state or local tax return? You did? Okay. Yeah, let me pull up. I have it. I've closed it, which was silly of me, but I'll open it back up. I do have the WFD PDF. No, I'm just thinking about work. I'm thinking about W's. Interesting. Interesting. No, I don't think so. Yeah. No, yeah, you made a federal payment, but those that income that you received was only federally taxable. Yeah. Oh, absolutely. Yeah, that's what I usually decide. As it's not even worth going through this itemization. You're getting tired? Yeah. I know. That's how it is with taxes, isn't it? Okay. Let's just see how this stacks up so far. Alright. So you've got investment interest. This would be no, okay. Yeah. What I'll do is I'm going to blank out yours, just for now, your medical expenses, since it looks like this is paltry. So, yeah, the other ones would be bond premiums, federal estate tax, claim repayments. Yeah, no, these are... You're looking over my shoulder and your eyes are glazing over. I know. Mine almost are too. I'm sort of reading them being like, oh, I haven't dealt with that in a while. I haven't read up on that in a while, you know. Okay. Yep, that's fine. And you are not a homeowner, you don't have mortgage, property taxes you're paying, anything like that. Yep, okay. Yep, $13,850. Even if we factored in the medical expenses, you barely get over half of that in your itemized deductions. Yeah. Okay. Did you have Obamacare? It looked like no. Yeah, you didn't have any supplemental health plans in addition to the one from your employer? Because you were saying you didn't pay any premiums out of pocket. Yep, okay. IRA was... It was the maximum, you said? Yeah. The maximum last year was... 6,500. Oh, now this is interesting. Hold on. Hold on a moment. Hold on a moment. I'm not supposed to. So, if you actually contributed that into an IRA and then you rolled it over, or into a Roth IRA, my mistake, and then rolled it over, you did not actually contribute anything to your traditional IRA. You have to report it like that. And you did recharacterize your IRA. Did you have any excess contributions to a traditional IRA? You would have had to pay additional tax on it, yeah. So you did the recharacterization last year, but okay, yeah. But you didn't have to pay a tax. Perfect, yeah. One moment while I check out everything on this form. Just doing some reading on this. You're keeping me fresh, keeping me up to date, keeping me on my toes. Making sure that I don't have to report this as a special distribution. Because it was technically distributed, you did take out the money and repay it. I think that's declared underneath the recharacterization, so we're good. Okay? Save and continue. And now we'll be reporting your IRA recharacterization. Do you have the date that you did that recharacterization? Yeah, we can look that up. Absolutely. So we'll go into your traditional IRA account. We'll check on the activity. Whenabouts do you think you... Okay, I'll look in Q3. Okay, perfect. I'm seeing... Yeah, I'm seeing some activity, money coming in. I'm seeing two different dates. I'm seeing September 8th and September 6th. Recharacterization of the previous. You did that in September. Oh, okay, you delayed your taxes last year. Okay. Well, you figured it out what to do once you have it. Okay. Once you realized you went over the Roth income limit. Yeah, no. That is exactly the way to go. I think it may be more tax advantaged if you... No, of course not. I'm thinking, if you did it before the tax deadline, you know, and you did, yes. Excellent. I think the most tax advantaged way to do things is if you then convert it back to a Roth IRA. Don't worry about that. I think if you're planning on retiring with ludicrous ludicrous amounts of cash, then it would become a option to do to go back to your traditional IRA to your Roth IRA, just because if you think the amount that you're going to be paying in retirement is going to be higher, basically if your income bracket is going to be higher in retirement, the amount of distributions you take out are going to be basically greater than what you're being paid now. It's a good idea to go with a Roth model where you essentially treat the income as taxable now instead of treating it as taxable when you withdraw, which is traditional. There's also the school of thought that all taxes are going to be higher when we are old and gray, and that means that a Roth is better for everyone, regardless of really where your income is sliding towards. But if you're planning on being very frugal in retirement, then such that you're in an even lower tax bracket, then that's its own thing. Yeah. Okay. Spiel over. We need to figure out whether it's the 6th or the 9th. And we also need to look up the original contribution date. Okay. Yeah, I can look that up. One moment. Okay, we're going to go into your traditional IRA, or your Roth IRA, my mistake. And look at the activity there. And I'm going to look for a $6,500 deposit into the account from last year. Do you know when you would have done it? Beginning of the year? Yeah. Okay. Can I ask why you haven't done it yet? Yeah, no, the stock market is crazy, and all this IRA traditional versus this one versus the other. I think if you just commit to the traditional IRA, I mean, you've got a traditional 401k, so it makes sense to... Yeah, your plan offers an option to do a Roth IRA as well. Or a Roth 401k, my mistake. Yeah. We can talk about that afterwards. I can offer you some financial consulting on that. For another price. No, don't worry. Okay. This is where it's gonna get funny. Alright. Did you invest that money out of curiosity? Okay. Not sure. Yeah. This is interesting. I'm gonna look at your positions, if you don't mind. Yeah. So you seem to have that same amount still in cash that you transferred over originally. Both from the previous year and the 2022 contribution and the 2023 contribution. in your traditional IRA that's still in cash because you're scared of the stock market. I understand. But get that in. Yeah, go nuts with it. You know, any sales that you make in your IRA are not subject to capital gains tax. So you can really play with this money if you like. Yeah. Yeah. Where to invest, yeah. Well, have you tried astrology? What I'm saying is, there's not very much rhyme or reason to this. Let's see. I've got a cost basis of your money in this one seems to have doubled since you put it in. This is interesting. Based on what you've said to me and what I'm seeing in the reports, they don't line up. So, this is interesting. It could just be the way that money was transferred from your account. Let's see. I'm gonna see what purchases you made in your... Okay. Something is going on. You made it. Okay. You are playing with the stocks in this, your Roth IRA. Interesting. Let's see. What purchases, though, did you make? I see you selling a few things. I'm gonna look towards the beginning and early in the year anyway. Sorry, I'm in love with your investments. This is fascinating. Did you know you held a stock in something that had negative dividends? Something strange is going on here. Because, like you said, I don't see any purchases. You're right. This is fascinating to me. I see. Oh, I see. Okay. Okay. So, the distribution. Okay. Finally. It's all coming together. Here's what happened. The 9-6 distribution, transfer of cash from your Roth IRA to your traditional IRA was the cash amount that you had on hand, valued at what the cost basis downflated for inflation. Oh, it's so confusing. Your initial contribution from 2022 had been invested and partially degraded in value, such that its initial cost basis was whatever the contribution limit was for that year, $6,500, $6,000, I don't remember. But the investment that you made went down because everything was down in 2023 when you made this contribution, or when you made this recharacterization. So that's where the $5,700 amount comes in. That was the first amount that was transferred over. The second amount that was transferred over on the 8th of September was a partial payment in cash. It was the amount of cash you had left in your Roth IRA. And the rest of it was paid out in stocks, or in this case, a mutual fund. It's paid over with a mutual fund. You probably specified that as your preferred non-cash amount. So the amount that did actually come over was $6,500. What would you like me to enter for, or do you have any preference for what I enter as the reason for the recharacterization? Because I am going to just enter your total amount transferred from Roth to traditional IRA as $6,500. After, let me just double check by looking at the addition of those two amounts. Oh, this is going to be fascinating. There's no cash, or there's no cost basis. No, yes, there is. In positions. That's exactly where I'll look. Okay, so 45, 25. And the cost basis is slightly over. This is interesting. This is fascinating. All right. This is fascinating. I'm going to go by your word over the reports in your banking accounts. It could be that the cost basis is from the original investment, not the investment as it was transferred over to the traditional IRA. This is such a tricky situation, but I think you have the story straight. And I think what I've pieced together is exactly what happened. What lovely, lovely chaos. I love taxes. This is why I'm doing this. Okay. Anyway, recharacterization reason. It was income limit over... Oh, this is fun. That was... Okay. Beautiful. Okay. You didn't withdraw any contributions, from your traditional IRA, correct? Yeah, if you do it the tax year that you... There's certain implications. If you have the money invested, and you withdraw the money back, and essentially it would be an infinite money glitch if, without tax ramifications. If you were able to withdraw without repercussions for how much money it made, but other than that, it is permissible to withdraw, to go take backsies on what you put into your IRA. But you didn't, so. Do you have an SEP or simple IRA? Just the Roth and traditional? Okay. And did you make a contribution to a Roth IRA or to an IRA? Hold on. I do have to double this number. Where was I? Did you contribute anything more to your traditional IRA for the 2023 year? After 2023? Okay. So, it's time we deal with your foreign taxes. You can either itemize them, which we decided you didn't want to do, or you could take a foreign tax credit. That's what I thought. And you don't have a carryover from 2022, correct? Or earlier? Okay. Yeah, you only have a small amount of foreign tax credits, so. Did you have any college expenses this year? Okay. Did you pay on any student loan interest? You would have received a 1098E. No? Okay. Are you a teacher, kindergarten through K through 12? Okay. You won't have any expenses then. Earned income credit. Yes, that you do not qualify for that with your AGI. You're not a homeowner, so I assume you didn't, I will assume you did not, make your non-existent home more energy efficient. And, did you have a home last year that you made energy? You know, you didn't sell a home this year, so. Okay. Did you pay for childcare? You don't have any dependents. No, okay. Okay. That'll be all of your deductions, at least your common ones. You do have HSA contributions, correct? Yes. Okay. Did you take any distributions? No, you did the tax exempt vehicle. And And you were eligible for the HSA for all of 2023, meaning you were, for the entire period, you were on a high deductible healthcare plan. Okay. Did you make any HSA contributions outside of those that were deducted from your paycheck? I've already got those listed. Yeah, that's not very common. Okay. And your healthcare plan, your HDHP, that is covering you only, or does it cover family? Yeah, you don't have any dependents, and you're single, so. Were you ever covered by a family HDHP in 2023? I mean, not ever, ever. Yeah. Okay. Did you make any excess contributions to your HSA in 2022? You would have been taxed for it, yeah. Okay. Let's see. No adoptions because you have no dependents. You shouldn't be able to have an MSA because you have an HSA. You're neither elderly nor disabled, nor do you care for anyone elderly or disabled. You have no home, so you don't have a mortgage. You didn't sell a home. You're not a first-time home buyer. You didn't buy a home. Did you buy an electric vehicle this year? Would have to be plug-in electric or fuel. You didn't. Okay. It's actually interesting that credit only applies the first time the car is purchased. If you purchase the car used, you do not get the credit. I find that fascinating. Okay. I'm gonna lean back a bit and rest against this pillow I have here. Okay. Did you invest in any businesses for rehabilitation projects, efficient energy? This is a very interesting scenario, but directly investing in any of those businesses. If you were doing it through the stock market, you either would have received a form about it, or you're not contributing enough to make it a relevant expense. Yeah. So certain types of employees can claim business expenses. Let me get the list. It's going to be armed forces. Are you a bootlegger? Okay. Are you a performing artist? In certain respects, yeah, this counts. It's So, are you employed by state or local government? And are you impaired? Did you make any expenses related to your impairments? Something I was able to claim actually was this keyboard. For that reason, I had a documented disability, or a documented injury rather, that I was going to receive a repetitive stress injury that required PT unless I had this keyboard, which eases my wrist strain. And so I deducted that. Do you have anything like that you'd be able to back it up? Okay. You're not in the armed forces. Did you ever pay the alternative minimum tax? Were you ever that rich? Okay, good. I'm sure these don't apply. Jury duty, alimony. I can take a look at all of these miscellaneous adjustments. 501c 18D pension plans. 403B. No, okay. Yeah, yep. That's a special retirement plan for certain types of employees. Jury duty pay would only be for pay that your employer claimed for you. Were you in the Olympics or the Paralympics? There's also reforestation, which I'm sure... Yeah. I don't think you can claim that. It's more of a business loophole, actually. Okay. That looks like all of your credits here. It's just that foreign tax credit, which is... Okay. So, we're going to finish up your federal return here. I know it's taken quite a while, but it'll be alright. Do you want to change your tax payments to estimated tax payments made quarterly for 2024? Yeah, if you've got an employer, you're able to adjust the amount that you're deducting from your paycheck for federal taxes each time you pay it. And so if you anticipate from your investments and such paying a higher amount of taxes than what is deducted, you are better off just using that. Do you want to apply the refund? It looks like you're getting a refund at this point. Pretty cool. Do you want to apply that to next year's taxes? Okay. You didn't do estimated tax payments this year either, right? You did it through the employer? Yeah, okay. The extension payment, that would be something you might have had to do last year. Actually, let me see. Nope. Okay. Do you want an identity protection pin? Paid preparer? Yeah, we do have to do that. I am being paid to prepare this tax return for you. So here's another thing. This is going to be if you want to add on my consultation services, which I would recommend. It's like a $10 bonus fee, and then we'll discuss if a return comes back. We'll discuss basically if a higher rate needs to be paid because of legal court appearances or something. But for the most part, it's just that extra $10 fee, and if something comes up with an audit, then I am yours, and that's it. It's essentially like the people who pay into the pot with the $10 and nothing happens. It's like insurance. Okay. Yep, I can check that off. And I will type in my own information in here. Let me just do a quick autofill of all that. I do this all the time. Okay. Perfect. That's the bare minimum of information. I can finish that up in a bit. English is your preferred language? Yeah. Foreign financial assets. I don't believe this applies to you. You just have... Yeah, we talked about you don't have actual foreign accounts. Okay. Let me double check that Nope, that would be a very large amount of money. Okay, do you have any household employees? Like some kind of nanny or butler or something crazy like that? Okay. Just wanted to check. I'm just gonna run a program on this. Do you have a child that's claimed by another parent? You seem so divorced. Yeah. Okay. Did you pay more than half of anyone's living expenses? Yeah, forever alone, yep. And you don't have an adult child with a job, yeah. Yeah, you're too young for that. IRA contributions, we've already covered that. HSA contributions are at the max. Homeowner, you are not a homeowner. You did not buy a new vehicle. You don't know no boat or RV, right? Okay. And we talked about job expenses already. It's just trying to get me to check those. Cool. So you currently have a refund, a fun fat refund of $1,015. How's that sound? Yeah? Okay. So we're going to move on to the state return in just a bit.